Hello everyone, Ranjit this side. So in this video we'll be diving into 3 candle pattern. Why is it being called one of the most powerful trend confirmation tool in the world of trading? And then we'll be going through the summary of how this is formed and then how we can write the Python code so that we can generate the sell and buy signal, or let's say the buy and sell signal with the help for the MetaTrader 5 user. Now, whether you are a beginner or a experienced trader, understanding this pattern can really enhance your trading strategy. Now, like I said, 3 candle patterns is a trend confirmation pattern, and when you see 3 consecutive candles of the same color, it means there is a continuation of the pattern, whether let it be a buy signal or let's say a sell signal. So this is your bearish pattern, right? And then this is your bullish pattern. The 3 candle pattern is used to confirm the trend, and whenever you see a 3 candles or 3 consecutive candles with the same color and almost the same size, then you can say that there is a potential continuation of the trend. Now there are 2 types of 3 candle patterns. One is 3 white soldiers, which is also called the bullish candle, or let's say the bullish pattern. Now this pattern has 3 big green candles, or let's say the bullish candles, and each candle closes higher than the previous candle. This is so now this is called the 3 white soldiers or bullish pattern, because you have 3 candles which is a green one, right, and all the candles are above or closing above the previous candle, right? So and then you again have 3 kinds of candles, or let's say 3 kind of patterns within the 3 white soldiers. Now how the difference is, if you see the closing of the previous candle is just below the current candle, right? And this is how the one of the candle, or let's say the pattern in the white soldiers looks like. Now here also it's just, I mean, there is a difference, or let's say a gap between the closing and the opening of the candle, but again it's a good confirmation of the trend. But this is kind of a tricky, because I would say even though it's a good trend confirming, but it's I will not go for the trade with this kind of candle, like 3 consecutive candles, 3 consecutive candles, because here the volume looks very less, because this was a big candle, but then this is a small body candle with the small body. I will not go for this one. This is a really good candle, and but last but not the least, this is also a good the pattern. The reason being, there is no wick. So when there is no wick, it means the number of buyers are like too much when it compared to the number of sellers. So here there is no seller, there is only buyer, right? Why? Because you do not see any kind of wick over here. So when there is a wick, it means the market was fluctuating, but at the end of the day, let's say the buyer won against the seller. Right. So this is what your 3 white soldiers looks like. Now the second one is 3 black crows, or let's say the bearish pattern. So in this, it's similar to what we saw in the bullish pattern, but here the candle color is most of the time, or let's say the candle color is a red one, and each candle closes below the previous candle. Now this is your 3 black crows. So whenever there is a candle which is getting closed, and then the previous from the previous candle, and then this is how the 3 black crows look like. But then again, this is one of the pattern within the 3 black crows, or let's say the bearish pattern. But then, like previous one, this can be your it can have your wick as well, right? So again, like I said, wick tells that the market was fluctuating, but then at the end of the day, the number of, let's say, the sellers was more than the number of buyers. Here again, make sure that you don't only go for the 3 candles, but make sure that you use one or more indicators. Maybe you can use RSI, MACD, or even your normal moving average, and even you should look for the volume part. I will come on to the TradingView website just to show you what it is. Now how these candle names like the horse or cross came in. Now the names 3 white soldiers, or let's say the 3 black crows, came from the old candlestick patterns, which used to be white and black, wherein the bullish candle used to be white and the bearish candle used to be the black color of the black color. Yeah. Now let's try to understand the psychology behind these three candle patterns. Now this pattern is more of, let's say, a psychological. There's a psychology behind this pattern which is called the herding. This happens when the traders follow particular, let's say, the trend because the others are also following it. It is similar to what people used to follow trends for the social reward. In trading, they do it for the financial gains, or let's say for the FOMO, right? FOMO means fear of missing out. So they don't want to miss the opportunity, and then they follow this three candle patterns. So what is financial herding, or let's say the financial trend following? So whenever you see, or whenever the trader is see three candles, let it be the green one or the red one, it gives you the confirmation of a strong trend. Let it be the bearish one or the bullish one, and it normally gives a confidence in the mind of the trader. Like I said, the psychology. It's like giving a clear sense of, let's say, where the market is going, whether it's a bullish or the bearish one. Now, how to detect this pattern? See, it's a straightforward process. Whenever you see three candles, let it be the green or the red one, you can say it's the market is in the uptrend or the downtrend. But you have to be very careful. The reason being, most of the time, even if the candle is, let's say, even if you see a three pattern candle, it might not be a good signal to buy or the sell the stock. See, detecting the three candle patterns is easy or straightforward, but you have to follow some strict rules, right? For an example, let's say for the bullish signal, if you see the current candle is closing above the previous candle, so it's for sure it's a buy signal. But then you need also to see the size of the body, because even if the candle is getting closed higher than the previous candle, but the body size is smaller, then there is a high chance that the market is about to go on the reversal level, right? And then like I used to say, don't just rely on a single candle, or let's say a single pattern. You need to make sure that you also use another indicator, let's say the RSI or the MACD candle. And then similar to what we saw for the bullish candle, the bearish candle also, whenever you see the candle is getting the current candle is closing lower than the previous candle, and the body size is almost similar to what the previous one was, then it's a purely a sell signal, right? But again, what we saw in the bullish candle, you need to make sure there is a high volume, or let's say there is a good volume whenever there is a buy or the sell signal, and volume is one of the good factors to see the market trend. Now, algorithmically, when we apply this pattern, we also need to make sure, like I said earlier, the body of the candle is really crucial. So even if you see a buy signal, or let's say a continuous three green signals or continuous red candles, the body always needs to at least of the same size or the bigger size than the previous one, because then it gives you a kind of, let's say, a confirmation that the trend is still being followed. And then don't always stick to one time frame. So let's say if you are going for 1 hour candle, or let's say 2 hours candle, or even the 30 minutes candle, then also look for the daily candle, or let's say the daily time frame, weekly time frame, or even the monthly time frame, because sometimes, it does not really matter to people who are like scalp trading, but generally when you see a higher time frame, you will see a bigger picture of where the trend is going, right? So it's always good, because sometimes people say that whenever I take the trade, or let's say whenever I buy a stock, the market goes the other way. It's because of these people, because the traders do not used to look that higher time frame. And then, like I used to say, now here are the couple of practical consideration when you are going for the three candle patterns. One is always you always needs to make sure that you do the back testing of your strategy. Then the second one is, don't go for the hit ratio. So sometimes when you do the back testing, you see many of the strategy is getting hit multiple times, but then that but then you also needs to take care that how many times are you gonna take the trade, because if the number of trades are higher than the profit margin, then a single trade of loss can take out all your profit. The third point is always, always make sure that the risk reward is always on the positive end. So if like in the previous video I was mentioning, if you are taking a risk of, let's say, 1 rupee, then you also needs to make the reward of 2 rupees at least. 1:2, that's the ratio. So, and some people don't take that into consideration, and at the end of the day, when they close the day, they would say, no, I was doing a good trade, but then why did I make the loss? It's because of the risk reward. The beginners don't take this thing into consideration. And then apart from that, I think it's always good to go for, let's say, using a moving average or RSI or even a volume indicator, so that you can have a second indicator as well, just for the confirmation of the trend, or let's say the strategy, right? Don't, like I said, don't rely on only one indicator, because even though this 3 candle pattern is really good a pattern for the confirmation of the trend, right? I will also show you in the TradingView website how this is done. So in this, if you see, we have multiple 3 candles over here. So there is one 3 candles over here, then we have, or let's say, the bullish candle, and then we have again 3 candles over here. And in this, if you see, the volume is really high, right? So this gives you an indication that the market is really good, it's trending, and then it's always good. But now everyone teaches you about the good things but not the bad things. Now I'll show you the bad things as well. Like I said, this is a weekly time frame, right? And in the weekly time frame, it's much easier to get to see the trend. But then now I'll show you a good example of how it looks like. Okay, so now here, if you see, or if you notice, you have 3 candles, right? You have green candle, 1, 2, 3, and even a 4 candle. But if you see the body of these candles, it's not consistent. So here we have a good body, here also a little bit good body, but here the wick is a bit high, and then here the body is almost next to nothing. Why? Because the volume is really low. See, if you see over here, the volume is really low over here, and this is the reason I was telling you the body is really important when it comes to the 3 candle or 3 candle pattern. If the body is not consistent, don't go for the trade, or don't go for any kind of buy or sell. And then maybe you can use like I said, volume or MACD or RSI, right? Here I would say, even though it's kind of 3 candle or even the 4 candle, but the body is not consistent. See, again, so whenever you see the body is not consistent, even though you have 3 consecutive green signal, or let's say 3 candles, or the 3 consecutive red candles, always make sure to use one more indicator. Now this is how the chart looks like when we created the algorithmic trading for 3 candles pattern, right? So let me just go through what the code does, and then I will share the code on my website, which is thedatascientist.me. I will share the link in the description. So what we did over here, so I will share the link in the description. You can go through that code and do the backtesting, because I will not suggest to use my code to do the live testing. But of course, I mean, it does work. It's not like it doesn't work, but yeah. Okay. So these all are libraries that you need to use. So we have datetime, PyTZ, and then PyTZ is a Python time zone, pandas, MetaTrader 5, which is really important. NumPy, Matplotlib is mostly to plot the chart. Then you have to initialize MT5. MT5 is again like MetaTrader 5 library. Now, why is it being done? Because sometimes, the MetaTrader 5 needs to be running at the background. Now, sometimes you might forget, and then the code will not work. So for that, I made sure that we initialize this, and then we pass on the login credentials. So this is username, this is the platform, whether you are using a demo account or not, and then this is your password. And then these all are these all are the time frames. So you can use 15 minutes, 30 minutes, 1 hour, 4 hour, 1 day, 1 week, and 1 month. So it's totally up to you which time frame you would like to see. But I would always recommend not to depend on only one time frame. Do the analysis or do the backtesting based on multiple time frames, right? So these all are the assets, and then I will not be using all the assets, but only one assets. I will show you how. If you have gone through my code earlier, or if you have seen my video earlier, you already know how this code is structured, right? So now we have codes. So what it is doing, it's checking whether the MetaTrader 5 is running or not in the background, and these all are the time zones that that we can try. So I have used America, New York. This is the time from to time to. So I've taken only 1 day of data because I'm using 1 hour time frame. So for 1 hour, I think it's 1 day is more than enough, but I mean, it's totally up to you, right? Now copy rates range is what it does. It's bringing the data, and if there is no rates, means like there is no data for that particular stock or tick, right? So mass import. So here, like I said, if I'm using D1, then it will use F1 frame D1. Otherwise, it will use the hourly. I will show you what I have done, and then again it shows there is no data returned if there is no data. So here this is what the data or this function. I'm calling this function mass import. So mass import is this one, and here I'm passing on the index number and the time frame. So what is index number? If you see, this is the asset. So I'm passing, either you can pass 1, 0, 1, 2, and 2 or 3 based on the need. So here I'm passing 1, which is the index 1. So index 1 is the USG Swiss franc, I think. Yeah. And right, okay, so after that going back, so adding column. So now what here we are doing, we are creating a buy and sell signal. So for the buy and sell signal, you need another column, right? And then for that we are adding multiple columns. I will show you that as well. So body is okay. Here this is really important, the body size. So I'm making sure that we have a body size of, let's say, 0.005, so that, or at least 0.005, so that the buy and the sell signal is consistent. So okay, now here we are creating the signal. Okay, right, so not bringing, it's bringing. Okay, so bullish pattern, what we are doing over here. So if the close column is minus the open column, and if it is greater than the body, so yeah, what we are doing, it should be greater than the body of 0.005, which we maintained over here. That's a minimum thing. I mean, you can go through the logic. I'll not go through. I'm like really tired now. Okay, so I'm really sorry for that. But you can surely I mean, you should be doing something from your end as well. Not just copy pasting things, but be responsible, right? So the rounding is done. So normally the tick is 4 decimal places, but here it's up to you how much you want to do that. So the more the rounding is, I mean, this was majorly done for the previous pattern candle, but this is most like how much rounding you want to do with the tick, right? So this is a plot, a signal chart. Again, I mean, it's if it is a buy signal, if it is like one is a buy signal, and then -1 is a sell signal, and then this sell column and buy column was added by me as a part of added columns. Go through the code, right? So this is your buy signal, sell signal, I think, yeah. And if there is nothing, so you will get 0. At the end of the day, this is what it is. Now here, if you see, we have 3 candles, 1, 2, and 3. This is 3 bearish candles, and then you have a sell signal over here. So again, we got 1 sell signal over here. So it is creating a buy and sell signal, right? Now to sum up, 3 candle pattern is really a good pattern or useful tool for the confirmation of the trend in the market. But by applying and understanding this pattern, you can surely make an informed trading decision, but also take into consideration all the points that I mentioned earlier. Thank you so much. Like I said, if you really like this video, please make sure to like, share, and subscribe. Click on the bell icon to get more videos on this channel, right? Thank you so much. It was a good video. Till then, take care. Goodbye. Take care of your health. Drink plenty of water. Eat healthy.